Alright, now let's get into Friday's review. So Friday, this is the candle at this daily candle. I'm screenshotting this at 9:34 New York time. So price is currently trading in the middle of our current New York opening gap. I saw this rally on Wednesday. Thursday posted the high of the week. The low of the week is right here. I'm not expecting TGIF because we're way away from the low of the week. I'm already traded off the high of the week. Friday can have a peculiar function. It could be a very massive trend, especially when it's at the end of the month. So I'm not looking to see price retrace lower to 40%. Not on a week which has had a bullish market structure shift on Wednesday. Such a powerful bullish market structure shift, as we saw in the previous videos on Thursday, Wednesday. There was a market structure shift that happened on Wednesday with a 1 hour market structure shift confirming higher prices. So on this Friday, I'm looking for higher prices. On the daily chart, it's possible for me to frame a Friday expansion higher as a trend day if pre-market session and London launch have already begun the trend. So dropping down its lower time frame, this is the 1 hour chart. So it seems the painter has not finished rolling up and down, because if you remember on Thursday I mentioned the analogy of a painter rolling the brush over the patches, rolling down, rolling up, rolling down, rolling up, to deliver efficiently this portion of price action which was totally void when we had the New York opening gap. So I've had buy side and sell side delivered here, and going into Friday trading, you see this move lower. So it's still like the repainting. The areas of interest to me are the weekly opening price, which comes around here, aligning with the low of New York opening gap. This 4-hour volume imbalance as well, and the 4-hour bullish order block. I've transposed this to this 1 hour time frame, and I want to see support at those levels, targeting the buy side. Dropping down to the 15-minute time frame, you could see that Asia traded here. This is Asian open. The price rallied, sweeping these highs on electronic trading hours. It declined as low as the bullish order block from the 4-hour chart. The bodies are finding real support at new week opening gap low. Now moving to the session, I see this precise support right here. Look at the bodies right here. They are finding support, not closing below 4-hour bullish order block, and they are occurring just below the 8:30 opening price. So they are in a discount. Midnight opening is right up here, so we're in a discount and we can expect to trade up into a premium. There's buy side liquidity at a premium. This move down during London session took sell stops below these lows. So everything I see is bullish, and we're finding support at the low of current New Week opening gap. On the 1 minute time frame, you can still see those levels during the opening range. The opening range is massively supporting the 4-hour bullish order block. It's giving opportunity to buy in discounts, and we see price rally just ahead of the 9:30 opening price. It rallies, creating a 5-minute market structure shift before retracing lower to 8:30 open again. Find support at this 4-hour bullish order block, and we see rally higher. The market structure shift is already in, but notice during the pre-market range there's not much of an expansion higher. It's just consolidative. I'm actually noticing this is high resistance liquidity run conditions, so it's going back and forth, and this makes the probabilities of seeing a trend day lower, and the trend day will target buy side far in premium on regular trading hours. But that is not looking likely because dollar index is consolidating. The S&P 500 ES is choppy, and YM is weak, it's bleeding lower. So given these high resistance visual conditions I'm seeing here, I'm not looking for a trend day per se. Probabilities are becoming low probability. This is the S&P 500 futures. This is a micro contract. You can see Asia, London open. You can see us trading now at the New York AM open. The New York AM Q zone is consolidating on the S&P 500. On the Dow, we see structure breaking lower, so this is really weak. High probability conditions are when these are in tandem moving higher, maybe after liquidity rate, but dollar index as well, as I said, is consolidating, so the signals for bullishness are not really there. And in review, this is how the day played out. If it was to be a trend day, we'll be targeting all this clean buy side liquidity above here. Retrospectively, price closed here, high of the day was here, and we did not attack this pulse. It was not a Friday trend day. But after the open, we see after this high recent liquidity run, there's a rally. After the rally for 5 minute market share shift has already occurred, I'm seeing this happen, and I'm drawing an optimal trade entry on a 5 minute leg up. I want to see price retrace into discounts for me to buy. My areas of interest are a 5 minute buy and balances and efficiency, and this 5 minute BC. So there are two, one up and one below it. So we know that the one above it can be traded to, and the one below left open, especially when there's a low resistance liquidity run conditions. I'm seeing high resistance liquidity run signatures, so I'm expecting a deeper retracement than what I'm seeing here. So the fact that I'm not being offered discount of this range between low and high entails me to be more skeptical to get in. My criteria is not exactly met, so I was not convinced to execute. So I did not trust this high resistance liquidity run conditions, and I did not see this deeper retracement, so I did not execute on the trade setup. I was demanding cost conclusion of the lower 5 minute BC, this one, and the sequence conclusion trade to as it aligned with 50% of the retracement. Since that did not happen, we actually saw price reject the higher 5 minute BC. The body stayed above current new week opening gap high, and it just hit the uppermost portion of the 5 minute BC. So it just nicked the high and we saw a massive bullish expansion. Now, to contextualize it, price did not offer me a trade setup. My terminus or my general liquidity for the session was New York PM highs. I was not expecting us to trade right up here, and we did not actually. This rally right here, I could not possibly frame that. In fact, in real time, I did not have regular trading hour 15 minute cost equation of a discount week plotted. This level right here was not on my chart real time. I had no idea where to trade to it. I was not expecting any liquidity pull above this one to be traded to, except for London session high and buy side liquidity. And at this point in time, at this particular price point, my risk must have afforded me a stop loss somewhere around OTE, or at least below 5 minute buy side balance and efficiency, and my terminus would have been at buy side liquidity here, because that's the levels I was looking at for liquidity. This retracement was not deep enough to give me that setup, and there was no this level was not yet on the chart for me to aim for. Therefore, my risk reward did not favor the trade setup, and I did not find my validation for the trade setup, so I stayed out of this setup, and those are the lessons learned. Moving to the PM session, we said that was the high of the day posted, and price consolidates during lunch. It stays within that range from high to low of the day until the close, just gyrating back and forth. A market on close macro does next to nothing, as expected on a Friday PM session.